All right, everyone. Today, another market update. We are specifically going to look at March 2025, the first couple of days of March 2025, right? So, if you are buying or selling or investing in real estate, you need to know what's happening right now. Okay, there's a lot of things change in our market, especially with a lot of things change in the government and policy and things like that, right? So today I'm gonna show you more and more information about Arizona market. At first, we're gonna look at number one, the change of the comfort market index. For those of you who have been following me, you're already familiar with this concept, but for those of you who don't, this is basically provided by a company called Comfort Associates, and they do create an index that show how the markets behave. Okay, anything that is more than 110 gonna be in the seller market, less than 90 gonna be in the buyer's market, and around that is equivalent balance, right? So in front of you right now is the monthly CMI, the comfort market index changes. Okay, in January we see 13%. um, in January, we normally see this is a typical one, 12%, and February is 9%, March is another 9%, and April and May is going to be even more. Okay, less negative. Okay, as of right now, we have 15 over 17 cities that actually see a very a lot of negative change. Okay, specifically we have right here Tempe and Chandler and Scottsdale and Gilbert and Surprise. You see here, right? Negative, almost negative 11, negative 10, negative 8 here for those cities on the top. Okay, Goodyear and Cave Creek are the only two cities that show an improvement, surprisingly, right? Because they are very um, outskirt area. I think one of the reason, I believe, okay, I think is because of the TSMC improvement. That's why Cave Creek and also Goodyear, with the access from the 303 to TSMC, is actually moving back to the seller's market. Okay, the average CMI, it has been dropped like 5.2% compared to last month. Okay, and is actually moving to the negative portion. Okay, so we have the current month is negative 5.2. The previous month is 7.5%. Okay, so we're still negative, but we're slowing down. We're slowing down actually. Okay, um, this one is favorable. Obviously, you see very favorable to the buyers, right? But because of this signal right here, we see that it's actually is actually less negative. You know the guess. You know the reason. Who can guess? Who can tell me the reason? It's mainly because of the interest rate. Interest rate has been slowing down a little bit last couple of days, and it helps with the movement. Okay. All right. So now let's talk about that. That's enough about a comfort market index, right? Now we're talking about the home supplies and inventory trends. Okay. We see right now more homes are available on the market. Okay. Giving actually is in favor of the buyers. Why? The buyers has more option to grow. Okay. On active listing, these are the home that, by the way, if you're not familiar, active listing are the home that without a contract, okay, increase 1.4% compared to last week. Okay, 1.4% compared to last week. And this one is 1.4 is a lot. However, it's actually a reduction. Okay, we have 1.4 here. The previous week is let's say 1.7. Okay, and the previous week is 1.8, and the week before is 1.9, right? So we're actually trending down as well in terms of the increased number of active listing. Okay, so that means the inventory growth rule is also at a slower rate. Okay, what about the contract ratio? Okay, so those of you who follow me, the contract ratio is the ratio between the under contract number over the active listing at a certain time. Okay, we actually has last year is 55. Okay, that's the contract ratio of 55. Okay, and now we actually go down to 38. Okay, so that means we have way more of available homes for the buyers to choose from. Okay, and they're not selling that fast compared to last year. Okay, so we're gonna talk about the buyers and the seller. What does that mean to the buyer and the seller? But in terms of the contract ratio, the smaller the number is, okay, the buyer has more favorable. There's more supply on the market, and they are not selling that fast. That means the buyer has more negotiation power because the seller going to be nervous. They cannot wait. They would rather accept a lower offer instead of doing the marketing and helping getting new buyers onto the house. Okay. All right. So that's contract ratio. We are going to talk next about pricing. Okay. Um, Okay. This one is okay. This is the pricing. Okay. So this one is we actually in sorry. This one is actually the national home average. Okay. This is the national home average trending. We see that the national home price is up 4.5% in February. Okay, this is 4.5% up. Phoenix home price is actually grew only 2.1%. Okay, yeah, this is the better pictures. Okay, you're gonna see that in 2025 right here, the blue line is Phoenix, and it's actually below the average of the national average. Okay, indicates that Arizona appreciation is slowing down. Appreciation is slowing down, no longer appreciate as high as you see here. 2020, 2021, 2022 is way above the national average. And right here is very close to the national average line and is also below it. Okay. So what does that mean to the seller? The home value aren't rising as quickly before anymore. Okay. So when you list the property on the market, pricing competitively is actually the key. Because if the buyer is very sensitive of because they have more houses to choose from, right? So why would they bother offering your house and not the other if you are not very competitive in pricing? So that's actually the number one key. Okay. As for the buyers, prices now, one way or the other, right? The seller, you have to be careful. You cannot overprice, but the buyers, you cannot be overconfident as well because the price hasn't been dropped. Okay, so those you thinking, okay, this one is actually the indication of pricing drop. No, it's still a positive number. It's still appreciation. Okay, but it's not as much. Okay, it's not as much as before. Okay, but definitely negotiation is a key. Even though the home price that is not dropped yet, it doesn't mean that you cannot negotiate. And in fact, you should because of the many available homes for sale on the market. And obviously, the home are not sold very quickly, right? So you can negotiate very well. Okay. Um, Now, the next part is we're talking about luxury home versus affordable market. Okay. In our definition, the luxury home is actually someone that is more than $1 million. An affordable home is the rest. right? Some, oh, actually less than 600, because I think 7, 8, or 9 is still not affordable to a lot of people, right? So that's the reason why I'm saying anything that is above 1 million is considered a luxury home, okay? And we are going to look at some area like Scottsdale, Paradise Valley, the north part of it, Cape Creek, okay, Arcadia, Butte and Fountain Hills. Okay, we actually see a home price increase on average 34%. Okay, 34%. That's a lot of that's a lot of increase for luxury market. Okay, more and more luxury homes actually are selling, and the buyer are buying crazily by cash. Okay, to avoid what you know, the mortgage. Okay, to avoid a mortgage, they don't want to make the mortgage, especially at that high rate, right? So luxury homes, 34% price increase. Okay, what about more and the days on market? Okay, uh, the days on market is this year right here. Affordable home, when you compare to affordable home, this year is actually longer, right? Last year is only like 18, 20 days on market. Last year, this year is about 40 in mid range from 600 to 1 million. Is 28 days last year, and this year is about 40 days as well. For the luxury, look at this. Previous year is like 45 days, and this year is only like 32 and 33 days so far. Okay, so luxury homes are selling faster. Well, it's not as fast, right? But it's still like 40, 45 days, very similar to any other market. But when you compare to previous year, it's actually having more advantage right there. Okay. Um, Next slide, we are going to talk about some key metric comparison. Okay, the blue line is affordable market, and the purple is the luxury market. You see price change year over year, affordable way less. Inventory change, we actually have less luxury inventory on the market right now, right? We have days on the market that the luxury is actually better. Sell to list ratio, very similar. I don't think it's going to be much different, although the affordable market is more willing to negotiate, looks like, right? So some key takeaway, luxury market is still very hot, especially in Scottsdale, Paradise Valley, and North Phoenix, okay? For mid-range and affordable homes, that have the growing inventory, the buyer has more choices and, of course, more negotiation power. Okay, so that's about the market. Okay, so here we have like 65% of the market. This is just a fun fact, right? 65% of the people buying luxury home pay by cash, and 35 pay by mortgage. Okay, next is we're going to look at some mortgage rate change. All right. So we are something going on here, right? This March is about 7.2, and we are projecting to go down, okay, around 6% around August, okay, which is a good news for those of you who are waiting for the interest rate to go down, okay. But we're gonna talk about that in a different videos. But it's really a good time to buy at that time, okay, is a consideration. Okay, we can talk about that in different video. So mortgage rate still high, you know, it dropped slightly, which has helped slow the decline in the seller's market condition for sure, right? The lower the interest rate, the better, I mean, the more motivation that the seller's gonna buy. Okay, so when the lower rate, when the rate is lower, it's increased affordability, and that's the reason why it stimulates the demand. If the rate continue to decline like this, okay, more and more buyer gonna be on the market. More and more buyer gonna be on the market, and you have to be careful in that situation because you have way more competition on the market. Okay. Um, top 10 performance cities. Okay, top 10 performance cities. We have Paradise, number one. Okay, 30% growth year over year. Wickenburg, 27% growth. Anthem, 25%. Richmond, 24%. New River, Cape Creek, Scottsdale, Fountain Hills, and Phoenix. Okay, Gilbert make the list, top 10. Right, but it's the very bottom one. Okay, what about the slowest? What about some slowest market? We're looking at Sun City is the number one, number five. Sun City West and Sun City, Florence, Casa Grande, and Queen Creek. Queen Creek is actually the slowest row. Okay. All right. So here's some big pictures. What next, right? We're gonna, after all the information, what is next for the buyers and sellers? Here's the thing: if you are buying, okay, for sure you already have a lot of inventory. Okay, you have a lower rate right now compared to 2 months ago, and you expecting to have more lower rate. Okay, means you have more negotiation power and more opportunity, especially if the inventory keep going up. Okay, if you are in a luxury market, expect a higher price and higher competition, because it seems to me that the data show luxury markets still not change a lot. Okay, if you are in the like a mid range, low range, affordable range of like 350 to 600, congratulations, you're the winner. Then way more homes available for you. Okay, now if you are selling, okay, price your home right is the key. Overpriced aren't sell home. Okay, if your home aren't sell for a long time, one of the reasons could be because of the price. Okay, I do have a list of 5 different mistakes on selling the house. If you are interested in that, please text me the word sell, and I will send that information to you. Okay, so that it guide you to find out what exactly reason why the home hasn't been sold. Consider offering concession. Always offer a concession. Don't consider. If they ask for it, offer it. Okay. The luxury market is strong. Okay, so the high-end homes should be marketed aggressively. Okay, so even though the luxury market is very high right now, the more you marketing, the better for you to sell a house even faster and at a higher price. Okay, if you are investing, okay, Scottsdale and Paradise Valley seem to have a very strong demand for higher price home, right? So perhaps maybe that is not a good area for you to invest right now, unless you have a lot of capital and you're ready to wait and you do more work, right? And then earn more, obviously, right? Rental demand remains steady and the home appreciation is not as much. Okay, it's steady rental, doesn't produce a lot of cash flow. Okay, but the appreciation and appreciation is also lower. Okay, with more inventory, there could be opportunities for flips and long-term holds. Okay, that is all I have in this video. If you have any question, feel free to text me, to comment, and to let me know. Okay, if you are interested in receiving a weekly market update to your email so that you don't miss any episode, text the word market to my number below here, 480-480-7948, and I'll send the information to you. Okay, thank you.